Argon Asset Management. I do think I did forget the currency picture over there, but we will be picking up on that later. Thank you so much for your time, Richard. Quite exciting moves that we are seeing there in the markets. Just starting off with, of course, the Fed decision that seems to be boosting markets at this point. Of course, as expected, the Fed keeping interest rates on hold, but really the outlook is what the markets were sifting through. Would you say that tone was dovish or less hawkish?
Well, firstly, good afternoon, and thank you for having me on your show. Yes, the Fed's always had like a dual mandate. It's always focused on price inflation and on unemployment, but just the focus of the last year or so has just been getting inflation under control. And now that the inflation rate in the US is close to just over 3%, still above the target range. Now the messaging from the Fed, is starting to change a little bit to highlight this dual mandate, and the market is taking it very positively, and now starting to price in some rate cuts, quite a few rate cuts actually for next year, and hence why financial markets have reacted very positively to this news.
Well, of course, we know that a beneficiary of rate cuts and easier monetary policy is risk assets, including the rand. And I'm wondering if this sets the rand up now for a good festive season rally.
Oh well, I don't. I'm not going to be bold enough to make a call on that, but yes, but with the lower interest rates in the US, it reduces the demand for US dollars, and the rand should, relative to the US dollar, could possibly strengthen a bit. Over what time frame, I don't know to what extent. I'm not bold enough to make a call on that.
All right. Yeah, no, a lot of people say that if they could predict what happens to the rand, they'd be billionaires or trillionaires at this point.
Exactly.
I mean, just talking about central bank decisions, we do, of course, have the Bank of England and the European Central Bank also coming out with their latest interest rates decisions. And I guess there have been some positive news, especially coming out of the UK, where inflation seems to be easing quite significantly. We even had an easing in wage growth in November. But of course, the European Central Bank faced with a shaky economy on that front. What are we expecting from those two central banks this afternoon?
So it's similar in terms of the narrative out of the US. So like in the UK, you've seen inflation is now below 5% compared to almost 11% at the beginning of the year. So inflation definitely seems to be moving or declining. And So yeah, so that raises the expectation that at least the hikes are finished, and that we're at peak hiking, or at the top of the hiking cycle, which means the market is interpreting that as meaning the pain is behind us. And you've seen in the bond markets as well, like the UK 10-year government bond has the yield has fallen by, I think, over 100 basis points from about October to now in December. So that's quite a quick reversal in terms of price and yields. So it is, the market is no longer as pessimistic, should put it that way, than it was a few months back.
All right, and we will be reviewing those decisions later on this evening on the close. Let's get into more company-specific news. And I actually just wanted to find out, because I saw today that Anglo American has bounced back by about 4%. Of course, that's after we saw those sharp falls in the share price in the last week or so. Exactly what is the biggest worry for investors about Anglo American right now?
Well, for Anglo American, I think we can take a step further back for resources in general. I think the concern for mining companies was just commodity prices in the face of possible recessions. And now what we've seen now with interest rates, the market is saying, well, central banks are going to step in and do their best to avert a hard landing, which means the outlook is not so negative for commodities. So you've seen today, I mean, you spoke about Anglo Americans jumping 4%, but the pure play platinum producers have been up from 8 to, I think Impala opened up this morning almost 12% up. So it's amazing what happens when there's lots of negativity priced into the share price of a company, and suddenly the outlook doesn't look so bad. What sort of short-term moves you can see in the share prices.
Yeah, it's really quite interesting because even with Teresa, they released their annual results today, and we did see some pressure there on the bottom line. Of course, their chrome and PGM producer, but we did see the market reacting quite positively in even to those numbers, that share price up 3%. So I guess it's really a case of investors now looking forward and, as you say, looking past the short-term moves. Well, before we get to your stock pick, let's reflect on some of the counters that have found favor with your industry peers.
I'm choosing an AIM-listed company, South African company that's listed on the London AIM, Bushveld Minerals, possibly a turnaround story. This is a share highly correlated to the price of vanadium, which is their main product. And so vanadium is an average hard, so not like platinum, but ductile, which means that it can be strung out into thin wire. It's a steel blue metal, which I thought was only a pose from a terrible movie, and can be used obviously in space vehicles, nuclear reactors, aircraft, and it's safer than lithium. So they had a terrible year, and they changed their CEO midway through the year. And I'm looking for a recovery in this share, basically. So Bushveld Minerals and Mining is my choice today.
All right, so well, let us get your insight on that stock pick. One that is actually my first time hearing someone actually picking that as a stock pick, Bushveld Minerals, and they produce vanadium. Would you care to give us insight on that, Richard?
I really wish I could, but unfortunately, it's quite a small market cap of Bushveld Minerals. I think the market capitalization is less than R1 billion.
Yeah.
So for your medium to larger asset managers, it is going to fly under the radar because it's difficult to invest in, just given its size. I think it's yeah, like I said, below R1 billion, and I think there's also some significant insider shareholding, which means that the free float is even more constrained. So to be honest, it is something that has flown underneath the radar for us. It does strike me as something that's probably more appropriate for a smaller cap fund, or even just for your personal account. So unfortunately, I can't add any color to it for you.
All right, but thank you for that insight as well that you have given us. Let's get to your stock pick for today. What will it be?
So I've gone for something a bit different. So I've gone for Hammerson, which is the shopping center owner of UK and French shopping centers. Just to give you the quick background, that Hammerson has gone through a very tough time of late, as the entire retail property sector has in Europe. Hammerson actually needed a rights issue in 2020 to help it sort out its balance sheet. It probably wasn't enough money raised at that point in time. So they've also, subsequent to that rights issue, had to undertake a disposal program to sell off some of its assets to try and reduce its gearing to basically fix its balance sheet. Where we find ourselves today in the UK is that rentals have fallen, goodness me, well over a third from their peak in 2017, 2018. But now we're seeing stabilization in terms of rents, specifically across Hammerson's portfolio of shopping centers in the UK and in France. And the valuation yields, especially on the UK properties, have risen significantly. So there's remember the inverse of the yields is the property valuation. So the property valuations have fallen significantly. And now at the moment, they're at a very significant spread over the UK 10-year government bond, which is a bit of a proxy or benchmark that you use to value these types of assets. So we think there's lots of protection there in terms of, at the moment, the narrative seems to be that interest rates are going to fall, which would be there'll be a tailwind for these property valuations. But if the market is wrong and there's still further interest rate increases from here, there's lots of buffer in terms of the property valuations, specifically on the UK assets. And then, so from a downside perspective, we think we're near the bottom. I mean, Hammerson is trading at an almost 50% discount to these valuations that I've just described. And then also there is upside in terms of their ability to dispose of their 40% stake in the premium outlet business called Value Retail, which they carry at approximately 1.2 billion pounds on their balance sheet.
Yeah.
And to highlight that Hammerson's market cap is like 1.35 billion pounds. So there is the possibility of significant upside in Hammerson.
Oh, all right. Well, thank you so much for your analysis today on what has been driving the markets, Richard, so far. That was Argon Assets, Richard Court.